Hello, this is Stephanie Johnston with the Johnston team of Service First Mortgage. I want to first off congratulate you that we are at the finishing processes here and we're going to be closing on your home soon. So the most exciting part of this journey and getting your home keys. So I wanted to first go through the closing disclosure with you. This is a sample closing disclosure that we're going to run through the flow, how numbers work, what to look at on your closing disclosure. And of course, if you have any questions specifically on your document, please let us know and we're more than happy to assist. So the new document is called a closing disclosure. This is previously a HUD-1 or settlement statement in the past, now called a closing disclosure. It's much easier to read than our past documents. It looks very similar to the loan estimate that you've seen earlier in the transaction. Just a couple pieces we want to make sure are crystal clear to you as far as the numbers and how to read this. So the top section here, it's blacked out for privacy. Just all of the information, of course, will be included in yours. So it'll have the issuance date, when you're closing, when we're going to be funding, your property address, sales price, your information, the sellers, the type of loan, the term of your loan, and making sure the rate's fixed there in the corner. So all of that will be listed. This one's specific to FHA financing that I'll be going over today. Down here in the middle section is going to be your loan amount, so how much you're going to be borrowing. The interest rate will be filled in for your document. And then the monthly principal and interest, which will not change for the 30-year fixed if that's the term or whatever fixed term that you've selected. And then that there's no prepay penalty and no balloon features on any of our mortgages. The next section is going to break out the payment. So this is going to list the principal and interest, the mortgage insurance, and the escrow account for your payment, so totaling the $11.97 in this situation. Then down here in the bottom is going to list the estimated taxes, insurance, and assessments. So note that this number in this example, the $324, is exactly the same as the escrow account. So in this case, that there is no HOAs or homeowners association dues. If on yours there is in the other section that's checked and it has HOA dues, your amount will be higher in the estimated taxes, insurance, and assessment section than in your payment because your HOA dues are paid outside the loan. So that's where you'll see how much those are per month. As we previously discussed, the closing cost listed at the bottom of this document, just like in prior documents, is before credits. So this is a representation of cash to close or closing costs before the seller pays their fees, before anything's rolled into the mortgage. So it's a high number, and this closing costs are not really $10,000. So that's where we go through to look at the meat of how we got to those numbers. The cash to close and the closing costs are not added together. So in this situation that the seller or the buyer would bring the $9,596.68 to closing, that's going to cover all their expense for closing cost and down payment, everything together. The next page is where we're going to show how we got to these figures. So on this one, just have the processing and underwriting. You'll see that they opted to pay a little bit of a discount point. If you did, that will be shown in section A. Section B is going to list out the third-party fees, some of those, and then you'll notice that the appraisal and then the admin fee have been moved over to before paid column. That's because at this stage, most of the time your appraisal has already been paid for, so that's going to be something that's subtracted from the cash to close you need at the table. Next section is going to be all the title company charges, so surveys, title insurance, closing fees, all of that together. And then we'll show you that, again, the title policy, even if it's paid for by the seller, is still charged to you here. And we'll show you where you get a credit in the next page. The next section is going to be the recording for the county. Then the funds needed for prepaid. So we're going to pay 1 year of insurance to the insurance company you've selected to insure you for the next 12 months. And then the remainder of the month in interest. So in this scenario, from 2/15 to 3/1, we're going to collect an interest. Then you're always going to skip, or generally skip, unless we told you otherwise, the first payment, and you're going to make a payment 30 days after. So being he's closing on 2/15, we're going to skip 3/1 and make a payment 4/1 as far as his first payment. In your email that we've sent out, it will confirm the first payment. There are situations where this is not the case, but this is generally the way that loan disclosures are set up. Next section is funds for your escrow account. So in this, we've got 3 months of property insurance, so we've got enough to pay that bill when it becomes due in the following 12 months after closing. Then property taxes. So you notice this number is a little bit higher as we spoke about at the loan estimate. 5 months of taxes in this scenario are needed to close. The later in the year that this is, the higher the number that's listed on this line, because we need more money in your escrow account to pay the taxes due in December on the later we close in the year. However, the later that we close in the year, the larger that the seller credit is to pay for the portion of the year that they owe to you, which will be shown on the following page. So again, you're still going to bring only about 3 months of taxes, but the seller is going to pay part of these 5 months for you. The aggregate adjustment down at the below is a figure that's used to balance out your escrow account. So let's say in this scenario we really need 4.24 months. It's just a number. So let's say that that's the case. They would basically be lowering the amount of the escrow account to be a per day basis, because generally it's not 3 and 5 we need, it's percentages between the two numbers. So it balances back down the account. So it's lowering the amount for taxes and insurance. You'll also notice that down here in section H, there's another fee for title. Generally speaking, the title company is going to break their fees up between section C and H for title insurance. So they're going to be in 2 separate places. They're not more expensive. It's not an added fee. They're just broken up as to how they're disclosed. If you do have any HOA transfer fees or any HOA dues or whatnot, a lot of times that's also going to be in section H. Then down here at the bottom, you've got the total of the other cost. Then you've got the closing cost plus the other to get that high total. Then we're going to go skip down to the middle of page 3, and we're going to come back to the top. The middle of the document here is going to be credits between the seller and the buyer. So in this case, the seller owes the buyer, they're doing $1,000 in a lump sum credit, so $1,000 in seller concessions, and then they're basically paying the portion of the year they owe in taxes. So that's going to be January 1st to our closing date. So again, the later we are in the year, the higher that number is. In this case, it's that $280. Now you'll notice some title companies will mark the seller credit here in section L, so to subtract, again, credits between buyers and sellers. Some title companies, if we go back to page 2 up here, will list in the seller paid column a bunch of charges. You'll notice the seller paid column is completely blank. Why that is the seller doesn't see your fees and you do not see theirs for privacy. So they have charges that they're also paying, but we do not see them. So if your closing disclosure, if you're getting seller concessions, they sometimes will move fees over. So we'll start going to the top, moving fees from buyer to seller. Then they'll total up here at the very bottom of the page, and they're going to show that amount in seller concessions that you're getting. So doesn't make the numbers any different, just different title companies do it different ways that your credits will show in one of the 2 places if you have title and seller concessions, So then going back to here, the seller owes the buyer in this situation $1,000, and they also owe them the $280. So we go back to the top of the page, you'll notice up here, those where those 2 credits are. So seller credits and the adjustments and credits are both in the final fees here. Sometimes those are lumped together in all adjustments. Sometimes they're separate. So if your number is really large in adjustments and other credits, it's all of those figures added together. Then up at the total, that's going to be back to the top is the $10,000 we pulled from the prior front page. Then the $500 that the sellers paid, the buyers paid, up front for their appraisal. Then we're going to add in the down payment. And remember from our loan estimate video that the down payment on an FHA loan is figured in where you're going to put your 3.5% down and then the 1.75% fee that FHA charges you to do the loan. You're still putting 3.5% down, but the way that the loan document's shown is the $2,800 is a reflection of 3.5% down less the 1.75 fee. So you're still doing the down payment. It's the way the document reads. It's a little confusing. Then the deposit. So this is the total of their earnest and option. Note that sometimes the title company will also move the deposit from this line down to those credits between buyer and seller. So sometimes you'll see this number go down and this bottom number go up. Completely, again, the same numbers, just different ways that the documents get done. So then that's how we get to adding and subtracting this whole line to the $9,596.68 in this example. So we hope that this information was very helpful to help you understand how to read the closing documents. Again, any questions, please reach out to us. And we are, again, congratulate you for your new home purchase. And we're so excited to get you the keys to your house. Talk to you soon.